And I'm Jess Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. Philippine GDP contracted for a third straight quarter in the 3 months to September, but at a slower pace as restrictions were further eased in a bid to restart the economy. Data from the PSA showed that the economy remained in recession. After shrinking 11.5% in the third quarter, GDP slumped to a record 16.9% in the second quarter and 0.7% in the first 3 months of the year. Year to date, the GDP print is now at negative 10%. The government expects the economy to contract between 4.5 and 6.6% this year. Household spending, exports, and services all declined in the third quarter. Government spending grew at a slower pace of 5.8% from 21.8% in the second quarter. NEDA Acting Chief Carl Kendrick Chua said the economic team is optimistic that the worst is over, noting the smaller contraction in the third quarter when more businesses and public transportation were allowed to resume operations. Chua says the path is clear to a stronger bounce back in 2021. But Chua said the Development Budget Coordination Committee, or the DBCC, may revise their projections following the third quarter GDP release. Some economists are also expecting a better performance in the fourth quarter, saying easing lockdown restrictions and the holidays would boost consumption and production. Meanwhile, House Ways and Means Committee Chairman Joey Salceda reiterated his call for another round of direct cash transfers amid a continued fall in household spending. Okay, Dan, never thought we'd see the day the index would breach the 7,000 levels yet again, at least for this year, and here we are. But are those warnings of a pullback coming to fruition?
As you mentioned, Jess, sorry to burst your bubble, but wait a second. So if you take a look at my terminal, we're really swinging between those gains and losses. Earlier, just literally 2 seconds ago, we were below 7,000. Now we're back above those levels, but not as good as we had hit yesterday. We were at 7,035 na yesterday. So we were correcting a touchdown 0.4%. But as you mentioned, this comes on the back of one of our best rallies we've seen in 8 months. Okay, so we were up by 5.2% yesterday. We led the rally across Asia, and this comes amid, of course, all of that euphoria coming from the positive news on the Pfizer trials for that vaccine. And this is the highest level we have seen since February, and the highest we've seen in the index levels since March 26. Recall that we did see the bottom, let's say, of this year at around March 19. Now, Rachel Cruz of AP Securities is saying this optimism might actually be going on and on for the next months, especially as progress over this development of that vaccine might be propping it up. However, you've got other analysts warning against a possible pullback. Jonathan Ravelas, for instance, of BDO, is saying that the market hasn't digested the disappointing GDP figures and is instead positive on those sentiments. He is uncertain whether this rally will be sustained, especially once investors start focusing on the growth data. Now, I just want to take a quick peek at the PE index here, because you're going to be seeing that the forward PE, so the price earnings ratio, has been hitting a high since, at least 2015. So we're actually trading at 21 times forward PEs. And this is something that Phil Stocks is advising against. They're saying that the market is still having a very lofty valuation. It's way above its 5-year average. And they advise investors to actually be waiting for pullbacks. Another exciting thing, though, that happened yesterday is foreigners buying the most Philippine stocks in 10 days. Take a look at that surge on my terminal, the very right end. You're going to be seeing that's around 2.3 billion pesos net that flowed into our bourse yesterday from the foreign investors. Now, let's take a quick peek at how the index players are opening this morning. This after, of course, you've got heavyweights yesterday propping up the index. For instance, you had SM Investments that was up by 11 11%. Let me just take out the correct index for you guys and not the S&P 500. But you did have the heavyweights up by 11.11%. That's SM Investments. Ayala Land was also leading the charge yesterday. That was up by 8.8%. You can see SM Investments now being one of the worst performers with some profit takers there. SM Prime as well was up by 6.8%. But I also want to mention several of the oversold stocks. For example, the airlines, you've actually got Cebu Pacific, one of the best performers as well yesterday. Let me pull out the airline stocks for you. But that was actually, surging together with a lot of the airline stocks and tourism related stocks offshore, especially on this vaccine news. Now, this just in, however, for Cebu Pacific, they're saying that their net loss was 5.54 billion pesos in the third quarter versus, of course, 375.7 billion pesos. Another one that I want to say really surged yesterday was Bloomberry, and that, of course, amid also other casinos worldwide were surging on this vaccine news. They, meanwhile, reported a net loss in the third quarter of 2.5 billion pesos. That's versus a profit of 3.91 billion pesos year on year. I'm just going to pull out the 3-day chart for you guys so you can see how that performed. And take a look at that, up by 6.2% in the past 3 days. And finally, another big mover here, you've got Chelsea Logistics. This after you've got Dito Telecom actually saying that they will boost the buy or swap at least 11.2 billion worth of its own shares, priced at 6 pesos, okay, to 6 pesos and 90 centavos each, to actually fund the acquisition of Udena's Dito Telecom. So there's actually going to be a share swap that's happening between two Dennis Oy companies, and that is making investors speculating that this hasn't been reflected in the share price as of yet. And you can actually see that climb yesterday as the Dito shares, meanwhile, were on a trading halt. Chelsea Logistics up by 33% in the past 3 days. So quite an exciting play here. What's going on, and that all of that mix. And just take a look at that this morning. That's already up by 9.4% in the first 10 minutes of trade, Jess.
But then you still got more third quarter earnings trickling in, but let's focus on one. How did first gen perform?
Okay, so we've got a lot of earnings as well. I think we mentioned we were around 90% complete now for the index players, but we still have one index player to be looking at. That is First Gen. They actually reported a third quarter net income of $62.9 million. That's versus the $54.9 million year on year. So an improvement year on year there. Nevertheless, if you take a look at the 9 months, it's actually fallen 11% year on year. But the 9-month revenues as well down 16%. So what happened in the third quarter? They mentioned that the recovery in power demand seemed to pull up the third quarter earnings. Of course, you've got lockdowns easing, and they're expecting this positive trend to be continuing. FGen, however, sliding a touch together with the rest of the local bourse. It's down 0.7% to 28 pesos and 80 centavos. Okay, guys, speaking about markets digesting that lower than expected GDP print, let's get some feedback from University of the Asian Pacific's economist, Professor Ronilo Balbieran. Good morning, Sir Ronnie. Welcome to the broadcast.
Good morning.
Sir, okay, very, quickly, your reactions to that contraction of 11.5%. Most economists surveyed by both Bloomberg and Business World were expecting single-digit contraction there. But still, this is better than the second quarter, of course. But still, with the economy 65% open in the third quarter, is this a disappointing print?
This is disappointing, but actually it is expected when we had an extended period of lockdown, especially for the construction industry, which is a very huge component of our GDP, and also the construction has a huge multiplier effect for the rest of the economy, and so this is somehow expected. And actually, what's alarming is that of all the industries, we have good news, better news for all industries except for two industries actually. actually. So
Mhm.
education and construction. So every industry is already reversing its trend as far as growth rate is concerned. But sadly, the construction industry slid further to around 39%.
Okay.
39% reduction. So that's one of the biggest multiplier. So it affects
Mhm.
the employment, the production. It affects manufacturing. It affects transport and logistics. So that lockdown on construction that actually extended towards the third quarter really affected these GDP numbers.
Sir, given that, capital formation, like you said, was the main culprit here in the third quarter print, what is the fourth quarter and the entire year really going to be looking like now? Will those effects, spill over into the fourth quarter and take an even longer time for the infrastructure projects, for example, to be built? Or will that be left in the third quarter and forward looking should be able to recover quite quickly?
That will be dependent on how the government can actually procure as fast as possible. So yung mga mga the delays from the 2019 budget and the COVID affected 2020 budget. So if they can actually fast track the procurement of projects, not just for construction but for the rest. We've seen the government spending also has decelerated as well in the third quarter. So the role of the government in the time of pandemic is something to be emphasized, especially on the fiscal side. So we really need to two things, yung procure all the projects. In fact, merong tinatawag na procurement short of award, so for the 2021 budget. That's why it's important that we are able to have clear direction on the 2021 budget. So that government can actually procure these projects even before 2021 and award it immediately by January 1. So we are quite in a hurry in terms of rescuing our economy from these worse than expected GDP numbers.
Sir, but given these projections and the fact that the DBCC is now, reassessing its projections, especially for 2021, can you say that the budget will be sufficient, especially when it comes to the COVID-19 recovery package? Or should they be also reassessing that and looking at whether they can find other funding sources to bridge the gap?
They should reassess. I think they were hanging on to the negative 5.5 to negative 6.5
Mhm.
full year performance, but right now the Philippine Statistics Authority said that it's no longer feasible. So I think if my calculations are right, we are projecting a full year of between negative 8 to negative 11. The worst can be around negative 11. So therefore, we are we are running out of time in a sense of really putting more cash into the system. So there's
Mhm.
no other way of doing it but putting more cash, either through more fiscal stimulus, more government projects, more construction projects, or pass the create bill as soon as possible. That's immediately 5%
Mm.
additional from the tax cut from 30% to 25%. So or the combination of those should really rescue our economy from this slump.
Sir, how do you propose that the government injects this cash? Is it still safe to be borrowing here? They've already said that they're going to be borrowing $300 million just for vaccines. And the plan is not even totally for all, but it's the poorest pa lang. To what extent is it risky to have this debt to GDP ratio even more elevated? Right now, they're expecting it at 9.6% of GDP already this year. At what point do you say, okay, that's too much to be reliant on external sources?
We have one of the lowest debt to GDP in history. So because of our so much surplus, no financial surplus for the whole economy. So we have so much space for borrowing. We can actually push it to additional 5% of GDP of everybody's forgiving of each other, and we don't have to ask for forgiveness because we have the largest net additional income from abroad. We have one of the largest savings
Okay.
rate. We're at par with Singapore and China, so we can really handle these additional loans from outside, and even from our domestic economy, from our domestic resources. We have almost 2 trillion pa rin na excess
Mm.
liquidity in the domestic market. So the government can borrow can still borrow from our domestic resources.
Okay, sir, let's talk about that extra liquidity still going around in the markets. Why isn't consumption picking up despite the fact that there's all this liquidity? We've actually seen, I believe, loan growth quite low in the past. I think this was the August print. It was quite low. Bank loans up by 2.9% year on year. So despite all of these monetary rate cuts, doesn't seem to be penetrating the consumption space.
Yeah, because there are no jobs, there are no production, and the two major components of the industry, two big in terms of size and in terms of multiplier, are one, manufacturing, and number two is construction. So because of the lockdown and because of well, you've started opening up all these industries, but again, we're still missing one major component, which is transportation. So how can people go to their workplaces? How can people go to restaurants, malls, or all these establishments if you don't have public transport? So we're still missing that particular component for the whole impact of manufacturing and construction, providing that particular extra boost to our economy. So we should be really consistent in terms of opening up our economy. So if we are opening up the establishments, we are opening up the factories, we should be able to open up ways for people to actually go to work. So we cannot much of this cannot be done from work from home arrangements. So that's a major gap in our opening up of our economy.
Okay, so the transport sector, so something that can actually still be addressed here.
Yes.
And sir, finally, before we let you go, monetary policy meeting will be November 19. The central bank governor has said that he will, maintain the easing stance for as long as needed, but also at the same time that the, interest rate cuts need to first penetrate the market. Now with this higher than expected contraction in GDP, should we be expecting more, infusion or cuts from the central bank to propel the economy further?
Definitely, I think another 25 basis points would be welcome while we're waiting for the fiscal policy to take effect. So we have all the stimulus money, but they are being slowed down by the processes, by the procurement, by right of way acquisition. So the monetary policy can bring in more help, more assistance to supplement these efforts of the fiscal policy.
Okay, so a lot to be still revised there and
Yes.
revisited, especially as economists start digesting this print. And of course, all eyes are watching the Monetary Board meeting on the 19th. Thank you so much for those insights. That was Professor Ronilo Balbieran of the UA&P.
Thank you very much.
Okay, guys, we'll have more of the news when Business World Live returns. Stay with us.
You're still watching Business World Live. I'm Jess De Los Santos. Banks' non-performing loans rose for the 8th straight month in September, its highest level in over 7 years, as the economy continues to slump due to the pandemic. Banco Central data showed gross NPL ratio at 3.4% as of end September, higher year on year and from the figure recorded end August. This is the highest NPL ratio posted since the 3.42% in May of 2013. Bad loans stood at 365 billion pesos in September, 60% higher year-on-year and 20% higher compared to the August figure. RCBC Chief Economist Mike Ricafort thinks the ratio could have been worse, saying near record low interest rates have helped slow down any rise in NPL ratio. Bad loans are expected to rise 4.6% by end 2020, according to the BSP. Now, to give a point of comparison, it reached over 17% in the aftermath of the Asian financial crisis in 2002. Economic managers are now urging Congress to pass the FIST bill, which is expected to help banks unload non-performing loans to asset management companies. Now, this from the Philippine Star. Electronic exporters have become less pessimistic on their industry's projection this year, as they expect smaller contraction in the back of the gradual reopening of the economy. SAPI is now expecting a 5% full-year decline in electronics export, lower than the earlier 15% projection. Data from the PSA shows that electronics exports in the first 9 months reached $26 billion, down 11.4% from the same period last year. SAPI is more optimistic for 2021 as they expect a 7% recovery in exports should the CREATE bill be passed into law and if a vaccine is already available. If approved into law, CREATE is expected to bring down the country's corporate income tax rate to 25% from the current 30% considered to be the highest in Southeast Asia. Now more than ever, the need for stable internet solutions has become more and more apparent. Question is, does the Philippines have any tech infrastructure in its arsenal to actually connect better to the world? Now, to talk about that, we have Andrew Ko, Nokia's Vice President for Mobile Network Sales in Southeast Asia and Japan. Good morning, Andrew. Great to have you with us on the show. All right. So, Andrew, let's kick things off. Can you give us an idea what exactly is Nokia doing in the Philippines now? I mean, we've known the company to be one of the first, at least at the forefront of creating mobile phones. But how has the business evolved since then, and what exactly is your presence like here in the Philippines?
Thank you, Jess. So yes, the story of Nokia is everyone remembers about mobile phones, but we're a company that's 150 years old, starting in paper mill, gumboots, tires, electronics. But in the 90s, we started to focus very heavily, not just on the mobile phones, but also the networks. And Nokia actually conducted the first GSM telephone call in the world in 1991. And here in the Philippines, we actually conducted the first GSM calls with both Globe Telecom and Smart Telecom in the 90s. Since these early days of telecommunications and connecting people, we've actually started to acquire a lot of other companies. Namely, we purchased Siemens Telecommunications, we purchased Motorola, and most recently we merged with Alcatel and acquired Alcatel to create a huge network provider that's focused specifically on not just connecting people now, but connecting everything everywhere and creating a truly interconnected society. Our mission used to be connecting people, but now we're creating the technology to connect the world. And we're doing that in the Philippines today and helping transition through this pandemic period through those actions.
And right, I mean, you are now in the business of creating internet platforms and solutions. And like what you mentioned, the pandemic, how has the pandemic in a way boosted that particular business segment?
The pandemic has highlighted something that we've observed a while, that most of the infrastructure and communication technology investment has actually been going into the digital areas of the industry. So you talk about the finance sector, you talk about the digital economies, and interestingly enough, these industries have fared reasonably well during the COVID situation. Where we're starting to see a shift as a result of COVID, and we're hoping to see a shift long-term with the introduction of 5G, is more of this investment will actually come into the physical industries or the operational industries. like the shipbuilding and the construction industries that were mentioned in the earlier interview. And if we see more infrastructure and communication investment in these technologies, then we'll see them able to handle situations such as the pandemic better. But it's going to take time. Our predictions for these industries to really start to digitize properly are 10 years out, where we're predicting 2030 is when 5G will actually start to bring real value into these called physical industries. But we're seeing that shift accelerate now in COVID. We're seeing a lot more interest in enterprise about how to digitize asset tracking, how to digitize physical industries. And we think that will continue. If anything, this pandemic has reminded us of, it's how critical communications infrastructure is and how much we've come to rely on it before, now, and even moving forward in this COVID situation.
But Andrew, that also begs the question, how quickly and fast can the country really roll out and adopt 5G? How is that going to overhaul the network system? And is legacy infrastructure still going to be a bit of a holdup here in the Philippines?
Jess, I seem to be having some technical difficulties. Maybe I'll just comment on what industries are moving quickly in this area,
Sure.
globally and in the Philippines. And I would say
Sure.
that at the moment in the Philippines, where we're seeing industries like the port industry, industries like the mining industry, power, where we're working with companies such as Meralco, with companies like Aquarius to digitize electrical grids, to improve the port automation systems, and to improve mining. These big physical industries are moving first, and we see that will pave the way and create use cases for other industries to follow in the coming years.
And what's also exciting here, Andrew, is that you also have partnerships here with telco providers. For one, you are partnering with Converge to provide fiber solutions to thousands of customers in Mindanao. How do you plan to go about this?
Yeah, so with regard to Converge and Mindanao, again, that's part of our objective. Is we don't just do mobile communications these days, we also do fixed communications, and a large part of our business is these digital cloud enablement platforms. So the partnership with Converge to bring fiber to Mindanao is really about just increasing that connectivity for people, building a wider digital economy. Mindanao was an area that we currently have operations in the country with some of our other customers. It was an area that Converge was looking to expand its network, and it made good sense for us to work together there. And it's really still fulfilling our mission of connecting everyone and everything. And fiber connectivity is an essential part of that equation. And again, referring to the situation we're in, if anything we've learned is that you can't beat a good fiber connection when you need to work from home remotely. So that fiberization continues, and we hope to see more of it in the future.
And lastly, you also have this partnership with smart Internet of Things platforms here. How will this exactly help enterprises go about their business, and how massive is the potential of Internet of Things solutions?
One thing people forget about 5G, it's not just about speed, it's about also massive connectivity. And this partnership we've just announced with Smart on the Wing platform is about enabling IoT. It's about creating a platform where thousands of devices per kilometre can be connected and tracked and managed. It's about going to industries like manufacturing and being able to enable all the items that they track and asset and use together. It's about enabling small businesses and enterprises to also be able to track and manage assets more accurately and digitize. Essentially, as I said earlier, is being able to increase their ICT investment and digitize their small objects, not just the big objects and the heavy objects, but tracking and managing small items and improving overall productivity. This is a fundamental part of 5G as well, and that's what we've recently announced with Smart and the Wing program.
All right, definitely lots of things in the pipeline for Nokia to try to at least connect the Philippines to the rest of the globe. Thank you very much, Nokia Vice President for Mobile Network Sales in Southeast Asia and Japan, Andrew Cope. Thank you for your time, sir. And that's a first look into the business day this Wednesday, November 11, 2020. I'm Jess Delos Santos.
Catch us again tomorrow morning, 9:30 a.m. I'm Danie, Laurel. We are One News.